You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music can mean only one thing. It's Thursday. It's 1:30 p.m. Central, 2:30 p.m. East. That means it's time for TWIFO, This Week in Futures Options, a program where we break down everything going on the other side of the fence, even though those fences are kind of merging right now with what's going on out there in the broad market. So we'll talk some commodities. We're going to talk some equities today. We're going to talk some rates, all kinds of fun stuff lighting up the tape out there. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. And I'm pleased to be joined in person, once again in studio, back within vocal range of each other, hot off some delicious gourmet burgers. Our old friend here, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to the studio. How delicious was that burger, sir?
It was fantastic. Great burger. Mark, thanks for having me back. Always enjoy being on the show and looking forward to today's discussion.
You may not enjoy today's as much as usual. I know you like to lean towards the more optimistic, the more positive outlooks. And I hate to break it to you, Sean, but there ain't a heck of a lot out there today, sir.
There's not, and there's lots of downside to talk about today. But again, there's an optimistic side to the downside, and that is there's an opportunity to buy. So I'm taking the positive look to the downside.
That's why I like having you in here, Sean. You always put a nice positive silver lining. Well, you know how I'm going to start. I think there's only one clear way, even for you, to go this week. But I will ask you nonetheless, Sean, every week. By the way, you guys, as always, can play along, listeners, cmegroup.com/TWIFO, TWIFO. That's where you get those reports. So you can generate those, not just when the show's live, but throughout the week. Head on over there, generate your report on whatever asset floats your boat. If you like lean hogs, we won't judge. Head on over there, click on the report, and download and analyze till your heart's content. But Sean, when I hit on that movers and shakers button to see what's moving for the week, it's showing me, shall we say, biased a lot in one direction. But where should we start this week, sir? To the light side, which is your want usually, or to the dark side?
Well, let's take it to the downside with so much focus on things showing this corrective nature. I think it's only important that we focus on it first.
Who are you and what have you done with Sean Smith, sir? I don't recognize you. But yeah, it's so much dark side on the tape this week, Sean, that we had to go down not just top 5, you got to go top 10 because there's just too much lighting up. The lowest entrant on our dark side here, Sean, is off almost 9.5%. That would be Nat Gas, off a whopping 9.4%. You're going to see a bit of a theme on this dark side, Sean. It's going to be pretty much equities and energy. And number 9, our old friend, the S&P, off a mind-altering 9.8% since our last show, Sean. So, of course, last week, I should say. Not since our last show, it was 2 weeks ago. But since last week. Then the Dow, hot on his heels, off 9.9% for number 8. Number 7, Brent, the international flavor of crude, off a little over 10%, about 10.07%. Then we go to the NASDAQ 100, off 10.4%. Then a little product, Sean, you may have heard of this one. I'm not sure. You might be familiar with this, called the Russell 2000, off 11.07%. Before we go any farther, Sean, just let me say that again. The Russell 2000, off 11.07%. Given everything else we're seeing transpiring and what some of these drivers are for this kind of panic sell-off, Sean, does it surprise you that we're at those levels for the Russell 2000?
It would surprise most, but again, the Russell 2000, that small cap index, is volatile. It's more volatile than others. And that's why we talk about SKEW on the show and why downside puts in Russell 2000 have that steeper skew. It's because when the market starts to head to the downside, Russell's a little more on the volatile side there.
Well, all those people we've been talking about for a while who've been loading up on about 3-month, about 10 to 20% out of the money puts in Russell, that's been going on for a while. They're looking pretty savvy right now. In fact, Sean, the only equity to outpace the Russell 2000 this week to the downside is the S&P Midcap 400 with off 11.5%. Russell 2000 outpacing every other index to the downside, which did surprise me a little bit. I think we have a listener question. Maybe we'll get to that in a little bit as well. Then we get to the energy realm. Number 3, WTI off nearly 14% this week, listeners, 13.92%. Number 2, heating oil off 14.27%. And leading the charge to the downside, the old RBOB, listeners, off 15.63%. So a rough week for the energy space, a rough week for the equity space. Let's see, Sean, I know you like a little optimism. Let's see if we can find a little silver lining up here. So let's move to the light side. You might think gold would be on that list, Sean, to the top 5, to the upside, but it's not. Gold actually doesn't make the top 5. It's number 6. It's up a paltry 2.14%. So perhaps gold, maybe not the safe haven, the flight to quality asset it used to be. It's outpaced by number 5, the Ultra 10-year, up to about 2.25%. Then the 30-year, number 4, up 2.65%. Number 3, palladium. Our old friend palladium keeps marching to the north, and it did it again this week, up almost 4.5%, so blowing the doors off gold there. Number 2, the old Ultra Bond, up 4.7%. And then, Sean, your old stomping ground of the euro dollars, up 22.11%. So what do you make of that, sir? Your old, do you recall many size moves like that when you were out there in the euro dollar crowd?
I don't want to date myself, but sometimes you'd get the Fed to move unannounced, and you'd get those big moves. But it brings back that kind of day. I don't think that all happened in one day, that 22%. But yeah, those big moves back in the 90s and the early 2000s were out there.
All right, so I think there's 3 complexes we clearly have to take a visit to today. You got to do energy, we got to do equities, and we got to do rates. That's pretty much the entirety of the top 5 and the bottom 10. There's not an ag to be found. There's even barely a metal to be found out there. It's pretty much all of those 3. So Sean, you're in the guest seat today. You're in the driver's seat. Where should we start our journey today, sir?
I think we should go with the highest of the increases to the downside, and that would be the energy products. So why don't we start there, and then we could head into equities.
Let's get a little dark. It's like I knew you were going to say that because I already have WTI up on my screen. It's been an interesting week, I think, to say the least, listeners, for equity. Sean, one of the narratives we've had on this show, particularly when it comes to crude, going back well over a year now, maybe even 2, has been, wow, there's no love for the upside out here. There's no love for the calls. Whenever we get any sort of move that you think would drive some upside paper, all they do is just fade it more. They take that opportunity to just sell it more. And it seemed kind of maybe overdone. It seemed a little bit aggressive. It seemed like there could be some cases for some bullish opportunities out there in WTI. And now the coronavirus has come along and just pretty much wiped out all of that. Any sort of demand hopes you had from anywhere in the Asia region and now growing. We see Italy locked down, other areas. The notion of this kind of global lockdown is really going to tamp down on crude demand. So crude has pretty much fallen off a cliff. WTI off earlier this week was off nearly 6%, hitting 45.88. So it's rebounded off that now. It's at about a 46.70 coming into showtime. So off a paltry 12.5% now on the week, listeners. But that 45.88 that it hit earlier, it's the lowest level in over a year, since January of 2019. That puts it on tap coming into today's loss. A little bit of rebound now, but coming into today was on tap for its fifth straight downside session. That puts it 29% below its 52-week intraday high, which was 66.60. That was last April. So that's pretty much a technical definition of a bear market, listeners. When you're off about 30% from your 52-week high, you're in bear market territory. So interesting stuff. Crude, or I should say Brent, also taking a hit down to about 51. That's its lowest level since December of 2018. So even going farther back. So not a lot of signs of optimism here in the near future for any sort of demand coming out of Asia and indeed other regions for WTI. And all of this has translated into a fair amount of paper on the tape for WTI options this week, listeners, closing in on 1 million contracts, 809,000 contracts on the tape. That's around 2x already what we normally would see in a typical week out here. So a very active week out here in WTI land. And it looks like April leading the charge this week, listeners, with about nearly 40% of the paper. April has about 19 days to go, so it's outside our 2-week window. So we can parse some skew out there. And if you're wondering, with the underlying at nearly 47, 46.70, threatening 45 to the downside, what was the number one print out here from an options perspective this week? If you said probably 45 puts, you are the winner chicken dinner. 28,000 of those on the tape as of today, including 11,000 today. Today is actually the most active day as we threatened that 45 handle today. That's when those puts really started lighting up. So 11,000 today, pretty much evenly split throughout the rest of the week. A lot of that opening. So decent amount of opening paper on the 45 put strike. Can't say I blame folks out there given what we're seeing out there from a demand perspective. Then we go all the way out here to June to see the 40 puts also lighting it up to the tune of 25, almost 26,000 out there as well. So pretty active number two. The lion's share of those also today, 10,000, about 10,500 lighting it up today. So nearer term 45 puts, a little bit longer term 40 puts are the order of the day out here in WTI. Can't say that's too surprising given the monodirectional nature of the paper out here, with the exception of a little bit today, a little bit of a rally coming on later on today. Let's see. Obviously, vol, Sean, is up. And it's up hard. It's up in this April contract, up 13.5 handles. This is a story we said before, Sean, and it's not one that gets a lot of play. We talk equities a lot when it comes to volatility and other things like that. We don't really talk crude and energy, but it's becoming more of a volatility play, a volatility story. And clearly, when you're seeing 13 handle swings in the volatility out here over the course of a few sessions, it makes it more intriguing from a volatility perspective. It makes me always... We know we always talk about RVX and that much missed volatility product for Russell 2000, but there still are. There's OIV and there's OVX. There's two crude VIXs as well. OIV in particular, the VIX of WTI, not a tradable product. How nice would it be to have that tradable vol product on crude for a week like this? So Sean, you're not alone. It's not just you and RVX out there. It's actually the crude folks. They want to get their OIV trading. But you can still track OIV. It's an interesting one to watch. In fact, let's pull it up right now. If you're looking for crude and crude volatility, you should keep an eye on that. OIV at about a 46.5 right now, up about 3.25 points just today. And let's see how it's topped out over the last few. Now, this is the high right here. Right about 48 is the high, so 1.5 off the high, but well off. A week ago, it was in the mid-30s, so it's gained about 10 handles just in that. So big moves out here in OIV. Well, let's talk SKEW really quickly before we move on from WTI. I think you can probably guess that the calls are probably not falling into favor. Let's see. Maybe that's changed. Maybe there's a little bit of this turnaround today. Maybe that's driven some call paper. Going out here to April, last week the puts were about 7.25% rich to the at the money. This week they're 10.5% rich. The puts getting more bid. Not surprising. The calls 5.25% cheap. This week even cheaper. 8.7%. So, Sean, no love for the calls again this week. Vol up, call wing in, puts are bid, and puts are lighting up the tape out here in WTI. I think most of that is probably as you might have expected coming in here. We could talk about RBOB quickly. We touched on it a few shows ago. Problem with RBOB is it's not really an option story. This week was actually pretty active, about 2x typical volume out here, about 1,700 contracts on the tape coming into showtime. That's pretty much double the last time we talked about it, but it's 1,700 contract. It's one print in WTI. It's not really something to get excited about out there. So if people are asking, why don't we talk RBOB as the big mover of the week? That's why. It's not really an options story. So, Sean, interesting stuff out here from the energy space. We touched on nat gas before, but I want to get to, we could probably spend the rest of the show just on energy, but I want to get to the other sector that's really moving. One that you may be a little bit familiar with. Have you heard of this sector? I think it's called EQUITIES. Is that how it's pronounced, sir?
Equities. Focus on the E there. Yeah, it's all good. It's the market's been rocking. And we've seen, we're in corrective territory at this point. So it's, volatility's up. It's corrective territory, but I think there was this delayed action of panic in the market. I haven't seen, women and longs first kind of mentality going on. I think people are understanding that the market was really hot, at its highs, all-time historical highs, and people were kind of thinking about it's time for a little bit of a correction. I don't think anybody was looking at 10+%, but I'm not seeing that panic. I don't know. Maybe you're seeing or hearing other things, but it just doesn't feel like a panic-stricken sell at this point.
I will say this, and I want to get the pulse of what you're hearing as well, because you're kind of traveling around when you're not talking to me. You're out there talking to the market-making firms, the trading firms, all these other firms out there who are knee-deep in the market. So I'd like to hear your thoughts on what you're hearing anecdotally from them. But I will say this. One thing that did kind of concern me this week was we obviously do a lot of programming here on this network with a lot of different people who have a lot of different takes on the market. Some of them usually diametrically opposed to each other all the time. Diehard bulls, diehard bears, people who are hardcore volatility cynics, all these other things. And this was the one week I think I can remember perhaps ever in the history of our program where all of them are pretty much on the same page, all of them entirely in cash coming into this week. So that is when I started thinking maybe this sell-off may have a little bit more legs to it when we have unanimity of opinion across our diverse array of co-hosts, Sean. That's a scary thing, and I was not prepared for that. But you're out there traveling hither and yon when we're not in here eating delicious burgers, talking to the folks out there, boots on the ground, particularly the small cap. And this is surprising. I didn't think we'd have this much small cap to talk this week as we did. I didn't think that it would be blowing the doors off everything else to the downside this week. So that in and of itself is kind of interesting and surprising to me. What are you hearing anecdotally as you're out there kind of boots on the ground talking to these firms? Is this, you kind of mentioned a buying opportunity earlier. Are people starting to see that? Are they starting to say, hey, maybe Russell's spooking me. I'm heading for the exits for a little bit. I'm going to cash. I'm looking at maybe starting to trade some of this vol. What are you hearing anecdotally from all these different disparate firms you're talking to all week, sir?
Well, it depends on who you talk to in terms of volatility, or you're talking just at market levels. There's those that take technicals into consideration. There's others that are thinking from an investment vehicle perspective, and then there's the traders that are just looking for opportunities to take advantage of inefficiencies in the market. And they all have different opinions. And as I said, there's not that fear in the market, but this pop in volatility, I think, excites our options traders quite a bit, and they're looking for opportunities to take advantage of those types of trades. I think I say it probably quarterly on the show, but there's always that moment where you can buy puts when you can, and I always say buy them when you can and not when you have to. I think we're in a when you have to kind of mode right now, and I think things have gotten expensive. SKEWs have obviously gone steeper, definitely in the Russell. Not surprised.
What is surprising in some of this volume, we've been talking about kind of the growth story for the Russell 2000 options over here on CME for a while. Nearly 20,000 contracts on the tape coming into show today. Some big 1,000 lots going up out here. So clearly, folks are swinging for the fences to the downside and indeed hedging out here in Russell 2000. It seems like, Sean, I'm looking here, we're at about a 15.24 right now in the Russell 2000. So it's off a mere 9.25% on the week now, Sean. So it's gotten back some of it a little bit, but still. So we're well shot, or actually we're threatening. We were talking for a while. How long do we say on this show? Oh, it can't pass 1,600. That was the test, right? Well, we did pass it. Now we come back past it the other way, and it looks like 1,500 puts are where the action is this week, which pretty much lines up with what we've seen week after week out here in the Russell 2000. People like their puts out here. You don't see a lot of call. We see some call action, but it seems predominantly focused on the puts, including over 1,000 of these going up, 1,500 puts this week. These are out here in March. So let's see how they broke down. Yeah, most of that going up pretty much today. Today's a big day. Go figure. The rest of the week kind of evenly matched out here from a put perspective. So 1,500 puts, Sean, where the action is in March. Let's go out really quickly, see if we see some other funky ones. 1,480 puts. A lot of put paper, pretty much. That's kind of 14.5 puts here in weeklies in March. So a lot of put paper pretty much across it. That's interesting. It is kind of what we see week after week, particularly on these contracts on CME, Sean. Folks like their puts. Let's go out here to the vol a little bit. Vol obviously up and up pretty hard. In fact, let's break it all down right now. Coming into showtime, our old friend VIX, a.k.a. the S&P 500 volatility, was at about a 31.25. That put it up about nearly 17 handles, Sean. 17 handles from our last show. It hit a high of nearly 35 earlier today. Let's see how it's faring right now. Back up to about 32.5 right now. So vol, I think it's fair to say frothy, Sean. A little bit active. The VVIX, aka the volatility of volatility, that's definitely going to be frothy right now, and it's north of triple digits. It's at a 114. It puts it up 15 handles. It was already 99 on our last show. Now it's at a 114. So that tells you volatility is moving, listeners. And our old friend RVX, a.k.a. the Russell VIX, a.k.a. the vol of the Russell 2000, that's up 17 points, Sean, from our last show. Pretty much in lockstep with VIX. That's rare in and of itself as well. So we got VIX at around 31.20, and the RVX was at about a 32.6 coming into showtime. That also hit a high north of 35 today, 35.70 earlier today here for the RVX. So both VIX and RVX threatening new recent highs. That spread, interestingly enough, you don't usually see VIX and RVX moving in lockstep as much as we did this week because that spread actually tightening up. It went from about 1 3/4 points wide, which is already pretty tight, and it tightened up even more, about 1/3 of a point down to about 1.4 handles. Does that surprise you, Sean, that we've seen RVX and VIX? Usually they move in the same direction, but there's different degrees of magnitude. This week, kind of moving in lockstep. Does that surprise you at all, Sean?
It does surprise me, but then, it kind of doesn't surprise me. With volatility popping like it has across the board, I think these two products are going to find their space as the markets breathe a little bit here in terms of volatility. But yeah, that spread is unusually tight at this point. I'm actually surprised at that, but as I just said, I'm not surprised because of the big moves that both of these indexes have made. They're highly correlated, but they're not that highly correlated. So there should be definitely a volatility opportunity there, and right now the market seems to be really tight.
Speaking of markets and being maybe a little bit spooked out there, your own folks at FTSE Research, Philip Lawler, he's your head of global markets research. He says he thinks this coronavirus outbreak has caught the global economy at a vulnerable point and is disrupting the prevailing mid-cycle recovery narrative and raising the prospect of a double-dip slowdown. So he's maybe starting to buy in a little bit too, Sean, that this could have a little bit more teeth. Maybe that's why FTSE Russell is outpacing to the downside, why we're seeing so much action out here. Speaking of action, Tim McCourt was on the show a couple of weeks ago talking about the micro E-minis. So they've been blowing the doors off of it this week on the futures side, Sean, at CME. They hit an all-time high of 1.8 million contracts on the 24th, so that was Monday. That's 28% above the previous record. So these micros, they continue to blow. Clearly, there was a broad retail contingent that wanted a smaller size contract, and they got it. Since we're talking equities, before we roll off, you have something there, Sean?
Well, I was just going to add record volumes in Russell as well, and record volumes in the Russell micros. It's been several huge days of volume in those products, and record volumes in both the Russell Mini and the micro. I mean, triple average daily volume types of numbers. So it's good to see that participants in the market are getting the liquidity they need, and CME and the liquidity providers and also the market participants are enjoying that really heightened liquidity that a volatile market needs. So it's exciting to see the CME being able to provide that for all of their customers globally.
Before we roll off equities, let's look at the big E-mini S&P out here, see what's lighting up this week. No surprise, it's to the downside, listeners. Off a paltry 9.13% right now. Can't quite break the 3,000 level. That's a level a lot of people are watching right now. We're at 30.34, off 305 handles on the week. It's hard to even say that with a straight face in the S&P, off 3. That sounds like that's some crazy biotech that's moving around. But 305 handles on the week, listeners. Which is crazy out here. The big print out here, you might expect, it's kind of a bit of a tie for first. We're at, like I said, threatening that 3,000 level, but it's a 2,900 puts. The ones going out tomorrow, they have 1 day to go, as well as the ones out here in March. Both of them doing pretty active paper. The March leading the charge, they have about 75,000 contracts out there. And the March 2,900 puts and the ones going out today have about 65,000 contracts on the tape. So pretty active. Once again, downside kind of leading the dance out here in March. Let me look really quickly to see what else, any other weird prints on the tape here. 3,000 puts, as you would expect, also doing pretty well. The number 2 at about 67,000 out there also in March. So it's pretty much what you'd expect, listeners. Near out of the money puts lighting up the tape here in the E-mini. The E-mini vol obviously up strong. It kind of depends where you look. Let's look out here where the March contract that's doing the most paper, 28% right now. The vol is up, a mere 17.5 handles, listeners. So, like you mentioned with the VIX, getting north of 30, 31.8 out here in the March vol in the E-mini S&P. And let's look at the SKEW really quickly. 18.5% rich. That's what the puts were last week. This week, 26.3% rich. The calls, 16.4% cheap this week, nearly 22% cheap. Puts coming up, calls coming in as you move down that SKEW, and vol continues to explode. All right, speaking of exploding, Sean, we always get the hate mail. You don't talk enough rates on the show, so we can't avoid rates today, Sean. It's kind of the only other complex that's really dominating the tape out here. Before we get to, I'll let you pick where you want to hang our hat in rates. But before we get to that, CME is tweeting out a few minutes for the showtime here that the Fed funds, their FEDWATCH, pricing in now nearly a 70% probability of a March rate cut. That's a huge change from just a few days ago. So people were saying, Sean, is the Fed going to do something or not? That was kind of the argument against the previous rate cuts, right? That if they waste their ammo then, what are they going to do when it really starts hitting the fan? And we are, unfortunately, now in a hitting the fan type of environment, and they have used some of those bullets, but the market pricing in 70% chance that they're going to use another bullet coming up in March, which that chamber is going to run pretty empty pretty soon. I don't know how many more bullets they have left out there. But, Sean, since you're an old-school rates guy, where should we hang our hat today, sir?
Eurodollars, of course.
Got to be Eurodollars. I wanted to put it out. Maybe you're an ultra guy. I don't know. Maybe you've changed your stripes since the last time we chatted here on the show. But the Eurodollars leading the charge this week, listeners, to the upside, up I think the technical term is redonkulous, 22.11% out there. So, yeah, the Eurodollar is once again just a beast. I look forward, Sean, to seeing just how much. I'm going to cover it up. I'm going to play a little guessing game with you, Sean. You're an old school Eurodollars guy. I'm just curious. Take a wild guess. How much options paper you think has gone up in the Eurodollars in total? Oh, my goodness. Spoiler alert. It's very high, Sean.
Are we talking 8 decimal or 8 figure or 9 figure? It's got to be 8 figure something.
It's firmly, not quite 9 yet, but it's getting up there.
It's getting close to 9?
Yeah, it's not quite. Like a good week is going to be what? Maybe 7, 8 million, maybe 10 million contract. This week, 15.5 million contracts on the tape so far. Listen, that just puts euro-dollar in perspective versus, I mean, we're just talking RBOB, 1,700 contracts for the week, right? Euro-dollar is 15.5 million contracts on the tape right now, listeners. So where to begin parsing this just explosion of paper? By the way, right now, listeners, the euro-dollar at about a 98.78 out here in those June contracts here, which is where we're seeing a lot of the paper right now, about 23, almost 24%. A big print out here, the 98 3/4 calls for that's more than WTI almost. That's half of WTI in this one print. 403,000 contracts, Sean, and these 98.
One option.
And yes, one option, 1 month, one strike, not even the puts, just the calls. 403. I mean, it's almost tough to fathom that level of volume. That's exactly what we're seeing out here. 98 3/4 calls, leading the dance. Let's see what else is lighting it up out here really quickly. Then we've got right behind it the 98 and the old 5/8, Sean. That's kind of fun to see that again. You don't see that too often out here, doing 383,000 contracts out there. And then number 3, the 98 1/4 puts. 340,000. Just listen to those numbers. Listen. Actually, I take it back. We go a little bit farther out. The actually, I misspoke. It was the Dees 98 1/4 puts that actually were number 1. They edged it out with 412,000 contracts. So the 98 3/4 calls in June were a paltry 403,000. The 98 1/4 puts in Dees 412,000 contracts, Sean. So just mind-numbing. But we're going to stay out here with these other contracts. This is where about 24% of the paper went up. Let's look at the vol. Obviously, your vol is going to be up and up firm, up 18.5 points here in this contract that has, 108 days to go, listeners, on this contract. So it's got some time. And yet the vol is exploding, I think is a technical term out there. Looking at the SKEW, the puts were cheap last week. They were 10.5% cheap to the at-the-money. This week, guess what? Even cheaper. 23.25% cheap to the at-the-money. And the calls, again, we're moving hard to the upside, so the calls getting all the love. The calls were 14% rich this week, 18.8%. Sean, going back into your memory banks from your dark primordial ooze days in the euro dollar, is that a commonplace SKEW setup? I mean, obviously this week is in a bit of an aberrant move, but is it common to have the calls bid over the puts out there, or is that more of a kind of a this week only phenomenon?
This is where Nick Howard could really give you a good indication in terms of that. It's been so long since I've traded that product.
No one's dating you. We're just talking about to see how seasoned you are, sir. Very seasoned. Well, like a fine steak, well seasoned. Got a nice dry rub on there. It's delicious out there. But yeah, these rates are I mean, obviously this week's going to be in a bit of an aberrant setup. Calls are going to be bid. We'll have to sink our teeth into maybe on a more normal week to do a little bit of a compare and contrast. It does look, obviously, week over week. Last week, the calls were still bid and the puts were still offered. So it was set up last week. Not quite as extreme as it is now. The puts have gotten cheaper. The calls have gotten richer. But it was leaning that way last week as well, which is kind of interesting.
It's actually, and it's kind of premonition-y. It's kind of really interesting that's the case.
There's enough flow out there, Sean. There's got to be some savvy paper out there amongst the, what did we say the number was? 15.5 million contracts, Sean. I'm just going to say that again. 15.5. People are writing asking us about lean hogs and things that do 8 contracts a week. Fluid milk, which is growing. It's up to about, 1,300 contracts a week now, Sean. But, I mean, come on, 15.5, 400,000. Not even on a strike, on just one option on the strike. It's kind of mind-numbing. So there you go, listeners. Again, we can spend the whole show doing a little bit of euro dollars as well. Tell you what, we'll be nice, folks. We'll find one more, because everyone wants rates. Let's do a little bit more. We'll pick another one, Sean. You get your choice. You get the Ultra. Let's go. How about I'll go 30-year? I haven't talked 30-year in a while. Let's go 30-year. Because we haven't.
About the 30-year all over TV today.
They were?
Yeah.
Oh, that's a reason not to talk about it. They're talking about it on CNBC. We're out. No, I'm just kidding. But let's go out here. Again, you guys can follow along. CMEgroup.com/TWIFO is where you go to get that drop down. Head on out to the rates. Click on the 30-year. I like to do select all. I know Nick doesn't. But hey, to each their own. Whatever you like. However much data you can handle. I like to see it all in one fell swoop. And 30-year, doing pretty decent paper this week as well, Sean. Nearly 1 million contracts on the tape. 988,000. Not quite Eurodollars paper, but I'll take most products. I think would take. I mean, VIX coming into Showtime today hadn't even hit 1 million contracts yet. So this is a lot of paper going up out here in the 30-year. We're at a 167.2 or so out here, listeners. In the 30-year, that's where we find ourselves, and the action is primarily concentrated out here in the April contract with about 39,000 of the 168 even calls. So a little bit out of the money calls here in April. So folks leaning on a little bit of upside. And that month accounted for nearly half of the paper this week. So nearly 500,000 contracts going up out here. In the April contract, again, 168 calls leading the dance, 39,000. Opening pretty much all week long. The big day yesterday, listeners, nearly 29,000 of these calls on the tape last week. Followed hot on its heels by the 157 puts. Also out there in April, 35,000 contracts. And then 159 puts with about 30,000 out there. So, yeah, interesting stuff out here. Let's do the vol really quickly. Vol up, firm, not quite as big of a move as we saw in the Eurodollars, but again, not as huge of an underlying move as we saw in the Eurodollars either. The vol up about, looks like 2.5 points in this April contract. So pretty decent move, but again, not exploding like the Eurodollars are. But again, the 30-year is up 2.65%, Eurodollar is up 22%. So a little bit of a order of magnitude difference out there. Let's look at the SKEW really quickly. The puts were nearly 5% cheap to the at-the-money last week. This week, they're about 3.5% cheap. So puts getting a little bit of a lift. And the calls were about 6% rich to the at-the-money. Now they are 4.4%. So the call's actually coming in, and the put's getting a little bit of a bid, which is kind of interesting. Perhaps not what you would expect, lighting it up out there. So there you go, all you rates junkies out there, giving you a couple of different stops out there in the rates sector. And speaking of all of our junkies for the show here, Sean, let's get some of them on now. What do you think with a little bit of their futures options feedback?
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, listeners, that brings us to your feedback segment. Here, I love having the in-studio and guests. We get a nice little chats in between the segments here. Your futures options feedback, the portion of the show where you guys take the reins. Now, Sean, I like the whole show, Sean, but I'm a big fan of the feedback section because that's where the folks get to join us. Their questions, their comments. If you have some, let us know. Hit us up. You can hit us up live, of course, in the live chat. You can hit us up on the Twitters and the stock twits via the old email, even snail mail. We'll get some letters every now and then. Pigeon. We'll take care of your pigeon. Whatever you want to send it in on, send it in. Let us know. So let's start off here. JLD. He's got a product complex on the brain, Sean, that a lot of people are not writing in about this week. That's crypto. He wants to know, is the SKEW data on CME Bitcoin reliable when there's such low volume? We were talking about that. They have the crypto. I think Nick and his team are calling it the Quick Crypto now over there on Quick Strike. So you can head on over there, click on that Quick Crypto button. Easy for me to say. And you can see all the data out there right now. And there is some SKEW data out there right now. We're looking at it right now. The Bitcoin, it's a little bit shy. It's broke through 9,000 now, 88.90. So all those out there arguing Bitcoin is non-correlated to the broad equities. Not so much this week. It's given up about 1,000 points or so. It's not quite as bad as we've seen out in the broad equities, but still pretty bad downturn after threatening 10,000 to the upside not too long ago. Let's see how much paper we got on the tape here. Actually, a decent week. 103 contracts on the tape this week, which for the CME Bitcoin is actually quite a lot. So that's interesting. I'll be curious to see how much that translates into for notional. But I can see your concern because the contract volume still isn't there yet. That's why if you listen to our crypto show, we break it down. We also break down a few other venues like Deribit and others that have been doing it for a little bit longer, so you can kind of see how much volume is going up out there, and you can compare and contrast the data on the SKEWs you see out there versus the SKEWs you're going to see here. They're going to eventually line up, I think, when we see more paper. But when we're looking for SKEW now, we're looking at some of the higher volume complexes just for our own sense to see how things are lining up, where the calls are bid, where the puts are bid, what's going on in these SKEWs. So, yeah, we tend to look at those. There's a lot of venues you can go out to find that data out there as well. Listen to our Crypto Rundown program. We break it all down there for you. So, yeah, we're still waiting for a little bit more volume before we can sink our teeth into some of these metrics there. But it seems like it's growing on CME, 103 contracts there, which, again, I know Sean, it's my biggest pet peeve in the crypto space. Everyone quotes notional. It's like, what market is this? Who does that? Outside of everyone quotes notional all day. They don't quote, I want to hear contracts. So I'm giving CME a hard time. They're starting to quote contracts more. I think as that number increases, we'll see more contract volume out there. All right, Sean, put on your question answering pants. Got one here for you. This comes from BILLBEANZ. I like the handle. BILLBEANZ with a Z. BILLBEANZ with a Z. BILLBEANZ with a Z wants to know, why do people love 3-month far out of the money puts so much in the Russell? Well, I was kind of joking at the top of the show, Sean, but we have seen a lot of that paper, A, and B, they seem like geniuses now, do they not? So what do you have to say here for our buddy Mr. Beans, who wants to know why do people love those puts so much in Russell?
You know, they like the weeklies too. So there's this desire for front month, second month, out 3 months, and I think the 3-month number is more because earnings of companies is quarterly is probably going to be my guess there, or educated guess. People buy protection on a quarterly basis. Earnings come out on a quarterly basis. Numbers come out on a quarterly basis, and 3 months out there, there's definitely a SKEW market that out 3 months that I think there's the desire to harvest volatility for a period of time, and I think that it's a comfortable length of time that the trading community is comfortable with.
I agree with you here, BILLBEANZ. They certainly seem to have coalesced around that time frame for their liquidity out there in Russell. They like puts, they like them a few months out, and usually pretty far out of the money. And this week, not so much. Now, again, when it's all hitting the fan, you don't tend to dabble. You get right in, and they're going a little bit closer to the at the money. That, like I said, the 1,500 puts, which are about 25 or so points out of the money right now, are the number one print out there this week. So not so much this week, but you're right. That has been the case in the past. And I think Sean's explanation makes as much sense as any other out there. There's premium harvesters out there who like it. It does seem like there's a lot of hedging activity in the Russell out there as opposed to harvesting, but there is a little bit of both. Judging by your feedback out there, you certainly like the harvesting strategies out there as well. So yeah, I think that's interesting. That does seem like, particularly on the CME platform, that's where a lot of the liquidity has aggregated. I think that makes sense with the earnings kind of lineup. There could be a little bit of dovetailing out there, and as we've seen this week, Russell can move regardless of what's going on the domestic front, which is, I think, interesting. Oh, look at that, Sean. We got another Russell 2000 question. Hot on his heels. After BILLBEANZ, we got Jack. Jack SCHWARTZ wants to know, how is it possible that the Russell, this is what we're just talking about. How is it possible that the Russell 2000 is leading equities down on such macro-driven news? Sean, when you and I first started doing the show together, what was kind of the narrative, right, around the Russell 2000? It was kind of this primarily domestic, primarily driven by domestic factors, somewhat insulated from the macro shockwaves, right, that are going on out there. They can do whatever the hell they want way over there. It's not that it won't move. Yeah.
All of that, yeah. It's interesting, and it's a great question, Jack. But if you looked at the numbers Monday, it was the best performer of your major indices. It was down 3%, and the rest of or was it 7? I forget what the number was on Monday, but it was down almost a full 100 basis points less than the other leading indices. So it was your best performer on Monday. It caught up on Tuesday and surpassed on Wednesday. So it's an interesting trade. They're more volatile stocks. And that's why there's such skew in those downside puts, is because of that volatility in the index itself.
Might be a good question for your research guy here. What's his name? Phil Lawler. You maybe ask him and say, hey, what?
A fantastic guy, yeah. He's got some really good input into the markets.
You have to maybe whisper it to him in the office one of these days, Sean. Hey, by the way, we had a good question on TWIFO. Because you're right, they are all domestic small cap names. They are usually driven and buffeted by the waves of the domestic stuff. So you're talking earnings and a bunch of other things that are going on the domestic front, as opposed to what the demand is for China. Right? A lot of these firms are not doing big exports to China and things, but they're, we are so closely integrated as an economy now. Production can still happen over there for a lot of these firms and things. So it's not exactly the old days where, Russell 2000 was here, S&P was here, and they were very separate silos. Right. Everything's kind of moving. What's the old joke, right, Sean? When it all hits the fan, correlation moves to 1, right? That's the old joke. Exactly. And we're starting to see some of that maybe now out there in the equity space as that would be interesting if everything was off 3% and the Russell 2000 was unched or up a quarter, right? That would.
That's why we don't see that move in the VIX versus X or the spread widening there. Yeah. Same thing. Volatility's moving kind of in unison.
Yeah, so I think we're in that moment right now. What was the listener's name? Jack. Where we're kind of in that everything goes to 1 kind of camp, and until it settles out, I think we're probably going to see Russell 2000. I mean, it was leading the charge pretty much this week, and we'll see if it can maintain that. But we're in this all ships are moving to the downside right now. Some of that is just the histrionics around the coronavirus, but it'll be interesting to see if a week from now, Sean, or we're doing it a little bit earlier because we're going to be at RMC next week. But if where we are when we do the show next, if Russell is still leading the charge to the downside or not, that will certainly be interesting. And maybe, dare I say it, since we're at a volatility conference next week, maybe a good argument that there should be the return of a certain volatility product that will go unnamed here, Sean. But I think
Let's go there, both of us.
Let's go storm their table at their booth and be like, we demand their
RVX.
Yes. We're just going to chant it out front, have it painted on our shirts, and just have signs, RVX. If there's ever was an argument for a small cap volatility product, I mean, look, the freaking vol is up, 20 handles this week? I mean, there's a case to be made, I think, Sean, that people would be trading this thing if it existed. All right, let's see. We got time for a few more here. Let's go to L87. He or she asking, it seems like demand weakness is here to stay for crude in the near term. Looks like those call wing traders were all correct when they faded every rally. Coronavirus was the real risk lurking in the shadows. Yeah, well, you're right, L. I said that earlier in the show. That's been a narrative on the show for the better part of a year, if not longer, that really can't persist any sort of bids to the upside when it comes to WTI. In particular, we've had market makers and other traders on to kind of break that down of why I think that is, but they've kind of highlighted that same trend that whenever there's a blip to the upside, it's just an excuse to fade it and crush it more. And you're right, it does seem like this big move to the downside now kind of brings all that to fruition. All those people who have been fading it, this seems to be a little bit of the feather in their cap, the icing on the cake, whatever you want to call it here. That shows that truly demand was always the question mark, and there is clearly a problem with demand right now on the crude oil side. So I think I would definitely agree with you. Demand weakness here to stay in the near term, and coronavirus apparently was. It was the shadow. What they say out there in Star Wars, the true enemy, the true risk has yet to reveal itself. Well, now it has, listeners, and apparently, at least for the WTI crowd out there, it is the coronavirus. All right, Sean, sad to say that music means we've already come to the end. How fast time flies when we're sitting here eating delicious gourmet burgers and talking about the world ending. I have several co-hosts on my network who happen to live in various compounds in scattered parts of the country. I told them, prepare a spot, just on the off chance, just in case. I'm not saying I'm heading out tomorrow, but it's always good to have that in the back pocket. What do you think, Sean?
Are they going to let you in?
Maybe some money changing hands, maybe some hard currency, maybe some
bring a lot of canned goods with you. Maybe they'll let you in.
bring some crypto or some diamonds, whatever it is.
Crypto.
We're negotiating that right now. But in lieu of that, Sean, in lieu of all this other madness going on out there, folks are clearly interested in what's cooking in the land of FTSE Russell, whether what's going on there from a volume perspective, whether what's going on from a premium harvesting perspective, certainly from a vol perspective. And it sounds like people also want to know what's driving it from a broad macro perspective. So if folks want to learn more, they want to engage more on Russell 2000, where should they go? What should they do, Sean?
They could go to our website, FTSERussell.com. They could email me at smith@FTSERussell.com. Happy to take all questions and happy to discuss this with any and all listeners. So I welcome that. And again, it's really interesting times in these markets. And I think next week during CBO's RMC, we're going to have some great dialogue, and there's going to be some really interesting panels about this recent move in volatility.
That conference is usually the home of the harvesting of the risk premium. I've got a feeling there might be some last-minute changes to that this week, maybe a little bit more on the hedging side. We shall see. So stay tuned for that, listeners. We'll come back with all sorts of data and interesting discussion points. Maybe a guest or two join us on the show this week. But we'll see. But Sean and I will be doing the show from RMC next week, so stay tuned for that. And, of course, in the meantime, if you want to check out all the stuff we're talking about here, whether it's the pre-ports, the analytics, all the other stuff, CMEgroup.com/TWIFO is the place to go. Kick the tires and light the fires. Again, that works all week long, not just during the show. So you can kick the tires out there and see what's going on. You have questions about CME Bitcoin SKEW or what's going on in Russell 2000 puts? You can find out the answers for yourself. CMEgroup.com/TWIFO. And on behalf of Mr. Sean and my friends over there at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many awesome and varied questions. I love hearing from you guys. It makes this show extra fun. And we'll see you back here next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.